just in time for your weekly, most comprehensive look at the world of business, finance, and economics. Tonight, we want to talk about equity repurchase programs, popularly known as share buybacks. We have had 3 in this market so far. 2 are currently underway. That is Nation Media Group running parallel with Centum. And the first one was, again, Nation Media Group. And that's why we're having this conversation with the chairman of Faida Investment Bank. I think I qualify to call him the transaction advisor in chief when it comes to matters share buybacks. Bob, Karina, karibu sana.
Yeah, asante sana.
Thank you so much for your time. Let's start from here. The market out here is asking, Nation was in the market 2 years ago with a share buyback. Currently another share buyback. Why 2 in such quick succession?
First buyback, which was done in 2021, was carried out because the share price had really gone down, and the management at Nation Media Group felt that this price is too low compared to the value of the share. And they therefore came up and applied for a share buyback to try and see whether they can buy the same shares from the market, because they believe it's valuable more than it was trading, and give the shareholders an opportunity to take advantage of the raised price, which was approved by the CMA at that time, 25 shillings.
Correct.
So they did that, and the shareholders were very happy. Unfortunately, we did not get the entire 10% which they were buying. We got 82% of the 10%, and that we felt was still good enough, given that we did that for a period of 3 months.
Correct.
But now, waiting another year or 2 years, they felt that still there has not been much improvement in the share price, given that the net asset value per share of Nation Media Group share is about 40 shillings. So they felt it's still not trading as low, as well as they would have wanted. Why don't we then still come back to the market and try and get our shareholders benefit from a higher price? By the time they were applying for the second share buyback, the price was about, the market price that time was about 17 shillings.
Yeah.
So they requested the CMA if they can buy the share at about 20 shillings, which was approved. But the whole purpose is that an issuer of the listed companies, when they realize that the value of their company compared to the price of the share are not aligned, they feel it is better to buy those shares, hold them, and maybe at an opportune time sell them, release them to the market, or use them for strategic purposes. So that's what Nation is doing, and they are hoping with a reduced number of shares in the market, the price will go up.
I see. And again, the naysayers will tell you that, look, if you remember the first experience in 2021, where NMG goes to market with a buyback, the price gains momentum. Again, shortly we see it receding again, driven fundamentally by the market factors as well. And here we are now with the second buyback, and the question has been asked, can buybacks really be used to rescue the share price sustainably? Or are you just opening a treadmill where you'll have to keep on doing buyback after buyback without mission?
Okay, if you buy back continuously, it will mean that you have taken out all the shares from the market,
yeah,
which is not the intention.
Yeah.
The market factors, most of them are not under your control, because there are many other economic things that happen. And as you know, our shilling has really been depreciating, and therefore there has been capital flight from the market, whereby the foreign investors are feeling that the share price, the shilling is losing value every day, and therefore they need to take their money out before the shilling drops further, whereby they will be requiring more shillings for the same dollar.
Yeah.
So the factors that are there on the ground are not favoring our economic conditions here, especially where foreigners are concerned. So the first purpose was for reducing the number of shares in the market, and it was hoped that once we do that, there will be more I mean, there's the same number of people buying the same share will now scramble for less shares, and therefore the price will go up. That has been the expectation. So it hasn't happened as well, but we are hoping now another 10% reduction will sustain the price at the 20 or higher. Because even now when the Nation Media Group is buying its own shares, there are people who are paying even higher for the same share, more than the 20 shillings. Yeah. So I think it will work, but you see, they are surrounded by many other factors which are not in their control.
When you consider the macro environment, as you've rightly said, we've seen the advanced market raising their rates, and therefore we see capital fly from this market. And do you think the timing is right? The timing in which we are conducting this exercise? Shouldn't we have waited possibly for all this noise to settle?
Very good question. But let me tell you, you have no evidence as to how long the conditions will stay. Let me say, there is never really time you can say this is the right time. For instance, I have no idea how long our shilling will continue depreciating. The shilling depreciates for the last like 1 or so years. It has been depreciating every day. So, and at the same time, you have seen the government is coming into the market giving higher interest rates for its fixed income products, the bonds and the bills. Where we are, we have not been there for very many years. Yeah. And the question is, how long will the government continue paying higher interest rates for the borrowing from the market? How much time do you think they'll continue doing? So we can't tell really. So I would say really there is never really a time we can say this is the best time to do this thing. So what you do, you reason out, you sit and consider, am I doing this the right way? Are the factors that I have used valid enough to warrant this action? And I would say the best thing is just to go ahead with your plans like all is well. Yeah. Because you can wake up tomorrow and you find something good has happened, the shilling has stopped depreciating, and those people who will have not taken any action will be left without having benefited from the change. So I would say it's okay to do it now. And I'm hopeful that the price will be sustained, all things being equal, meaning things like the shilling will hold a bit, therefore there will be no people selling for the sake of selling to hold the money, and all the other factors are working. So we are just hoping things will continue and the economy performing as well.
What lessons are you bringing from the first experience of the buyback in 2021 into the one currently underway?
Okay, the first, let's say not just even Nation Media, even us as an investment bank, the capital market industry learned a lot from the first share buyback, in the sense that Nation Share was the pioneer in the share buyback. And what happened that time in 2021, we used the provisions of the Companies Act. And while we used the provisions, it's because there was no guidelines as yet. However, CMA had some draft guidelines which were not really released. So after the first buyback, what they did, they gave us what the drafts they had to use for the 2021 share buyback. So after that, it was felt that the industry needs to have some guidelines for the exchange trading of the share buyback. So they came up with now fully released guidelines, which are now being used by, at this time when we are using this, carrying out the second share buyback, and also the Centum is using the same guidelines. Yeah. Then the other thing we learned was that you need to give shareholders more time. At the same time, you need also to publicize this matter to the shareholders so that they get to understand why are we doing the share buyback and what benefit is there for them.
Yeah.
So those are some of the lessons that we learned, and we are hopeful they will help this time. Then another thing was the first share buyback took 3 months. This one is taking 12 months.
Yeah.
So there is a longer period, but it depends. If we attain the 10% before the expiry of the 12 months, then that's why it will stop.
I see. Good points there.
Yeah. Centum is taking 18 months.
18 months.
Yeah.
I was actually going to tell you about Centum and 18 months.
And it is playing around the price they are buying, because it's they are buying at 9.02.
Yeah.
And it's I checked the last couple of days, it's been trading much higher than that. So at least the objective is being met.
All right. There are those shareholders who sit back and ask, because share buybacks, being a buyback as the word suggests, is that you use capital to buy back shares. And the question always asks, if you look, for instance, at the two companies which are currently having this program, that's NMG and Centum, and you look at their cash positions, some would ask, is it the best value for money to engage in a buyback?
Good question. Yes, I would say it would be, you have cash, and you see on a listed company, you want to make value for your shareholders. You want to give value to your shareholders. And the shareholders look upon the management and the leadership of the listed company to see, what am I gaining out of it? And one way is you can give either dividends, you can give bonuses, or you can do the share buyback. By that I mean, you can imagine like the first share buyback, as I had mentioned, the price was about 14, 15 shillings, or 13 to 15 shillings. They bought the shares from their shareholders at 25.
Correct.
So that's already
quite a premium.
A huge premium for the share. This particular one, the share price was about 16, 17. They are buying at 20. They are giving back to their shareholders indirectly, because that money they are paying is not to anyone. They are not going out there to pay anybody who wants money. It's their own shareholders. So their shareholder is gaining indirectly. Also, they are giving their shareholder a better fair price than they would have gotten it at the market if they never came to buy the share back to themselves. So,
okay.
So those are the good things about it.
I see. And Bob, you've been in this market for a long time. Does this market have an underlying problem with price discovery?
Not, I don't think so. Because you see, price discovery is like you have your tie, your suit you want to sell, and then you think it is worth 100,000. You put it to the market.
They tell me
the market will know it's either too high or too little. If the price is not right, then you'll find people not interested with your suit. If the price is right, as far as the buyers are concerned, they will fight for the 100,000. Say, I will pay 150, and it becomes like an auction, and that's how the markets are, because it becomes like an auction, and you get the best price for what you have. So there are times the price does not actually reflect the fundamentals of the company. The price actually gets affected by the status of the economy.
Yes.
That I want that suit, it's very valuable, but I can't afford it. I just watch, look, and go. There are times I like it so much, I'll borrow money and come and buy it. So I would say the underlying factors are okay for the price discovery of any of the shares. And the market is controlled by supply and demand.
Yes.
So if the demand is low, then the price will come down. If the demand is high, the price will go up. So, and that's where our market is affected much by the fact that the proportion of foreign investors and local or retail investors we have is so much lower for the locals than the foreigners, that when the foreigners leave, we are left exposed. And that's what really has brought our share prices of most of the listed companies down. When they come back, then the price you see it increasing.
But Bob, I was asking that question because barring the prevailing global macros, we've been in a bear run for quite a long time,
For quite a while.
you know.
True.
And even before this season where we had COVID-19 and then Russia, Ukraine, and the spillovers, you would look, for example, at the banking counters and you wonder what message is the market missing in this? Because if you look at them from a price-to-book comparison, you're wondering, we haven't unlocked value in this. Yeah. And many people have asked, are Kenyan stocks a value trap? Where you get in, but now you never get the capital gains in good time. Yeah.
That is true. And in fact, as you are saying, the banking sector, the financial counters, they have performed continuously, progressively.
Even during COVID.
So many years. I mean, every time they produce their reports, you find they have performed better than the previous year.
Yeah.
And as you say, the price, therefore, does not reflect the actual status of that company. But I think we go back to the same thing I'm saying. If the shilling was holding, or the shilling would hold, and there's not so much depreciation, I'm sure you'll find the foreigners coming back in bigger numbers. When they come back, they increase the demand, and that will raise the prices. Even today, most of the people buying those financial counters are foreigners. We have our institutions here, fund managers and the like, buying the same, but you see, they don't have as much muscle as the foreigners. So it will happen depending on other local factors improving.
I see.
For now, we just watch a good lady and letting go because I don't have the money to pay as a dowry.
I see. So it's a dollar demand question here.
Yes, exactly.
You are running 2 buybacks side by side. How is that experience? I'm just curious.
First of all, I'm very happy about having been the only investment bank and a stockbroker to undertake the 2 buybacks, or the only buybacks. We were the first to do it, and appointed the second transaction advisor for the second buyback of Nation. And what happened is Centum, I think when they decided they want to do the share buyback, they looked around and so we are the only experienced transaction advisors to do it. So they came straight. We know how we did the first one. We've learned from it, and therefore it was easy to take up Centum and continue in the same lines. And we are not conflicted because each one of them has its own fundamentals, and there are different counters in different sectors of the economy. So I'm finding it's a joy, and we thank God for having given us that opportunity to pioneer and continue offering the same expertise to those and others. And in fact, let me add, we've been approached also by other listed companies who have also felt
that the market is not giving them value.
No, the price
of
the share and the value of the company are not relating.
Yeah.
And they feel their price is selling too low. How can we save this situation? So we are trying to, they want to know what benefits will they get by buying back their shares. So those discussions are going, and you never know. In fact, in Europe, the report of 2022 showed there has been so much buyback that in the last report, the share buyback has doubled in the companies that are currently in the market. So it's not just happening here, it's happening all over the world.
I see. And actually, you preempted my next question, because I was going to ask you, given our previous conversation about does this market have a price discovery problem, even before COVID, we saw really undervalued counters. How is your pipeline looking like?
How is it?
Your pipeline in terms of potential buyback entities.
You see, what happens is we go to the market. You see, the share buyback, the best thing is you don't have a different market to transact those things. You go back to the market, you show and display that you want to buy at this price. So it's upon the sellers to sell to you at this. Therefore, anybody who wants to sell to us at those prices, they come to us. If you want to sell lower, I mean, it's up to you. But
Yeah.
we are buying at this price. It's up to the supply to give us the supply. So it's open to the entire market. Anybody, any shareholder, wherever you are, whoever you are using as a stockbroker or investment bank, if you give them the order, they'll bring to the market and we buy.
Okay.
As long as we are buying at the prices which we have put in place.
Okay.
Yeah.
But maybe now, actually, my question was, are there other companies who have come courting you, telling you, look, we've seen what you've done with NMG again, Centum. We also feel that we are under pressure and we would like to go this route.
Yes.
Maybe not specifics in terms of the companies,
Yeah.
but how many?
Okay, about 3.
Okay.
Yeah, and we have even attended meetings with their management to explain how the process goes and what benefits they will stand to gain if they go through the share buyback route.
Yeah.
So I don't know how soon they will come. I think they are watching. Is it good? Is not? Or what do we get out of it? But maybe the question is what you had asked earlier. Is it the right time to do it? And as I had explained, you'll never be assured of when it's the right time. Just like they say, maybe to digress a bit, I remember one time somebody was putting up a house at the age of 60. They have been living in a very dilapidated place, and they were feeling, why don't I put up some people are feeling you're too old to put up a new house. Then some of us told them, you see, you do not know how much time God has given you to live in this world. So even if he gives you 5 years in a place that you feel you have actualized, why not?
Yeah. Yeah.
So they put up, they are happy, they've lived now 10 years, they are still living. And you see now you're enjoying, because you see, you live as though you live for a long time. Not afraid I'll die in 2 years, so let me not enjoy the life. So similarly, this market will not assure you anything. You live like the things will be good and live in hope. And that's why we open up offices, come to work, and hope all will be well.
Okay.
So I would say it's okay to come to the market, do the things you want, and move on.
I see. What do you think can be done, whether from a policies perspective or from a CMA level, to support the environment for exercises such as share buybacks?
The bottom line is education, letting people know what it is all about and why we need to buy the shares. How is the shareholder protected? What are the risks? What are the gains? So basically, it's education to the public and all the investors. I think that's what I would say. And CMA, you see, it is also constrained by the amount of money they have to educate. Similarly, the stock exchange is also quite. It doesn't have so much muscles to educate. So you use every little forum you have and take advantage of that opportunity to educate people about all these things. So you can explain. The listed companies can explain at an annual general meeting or a general meeting called to approve this, to explain to them. Other than that, it's a bit tough.
Okay.
Yeah.
My final question, Bob, is this. You have been in this market for a long time and in various facets, at the exchange, at CDSE, now in transaction advisory. This market seems to struggle with the uptake of products. So we come up with REITs. We don't warm up to them. Securities lending and borrowing.
It's not happening much.
Day trading, not much momentum. First of all, when you look back, how do you think the Kenyan market has evolved? And what are we missing in terms of just roping in, especially the retail players?
Yes, Kenyan market is not taking up product as we expected, actually. We expected this to be taken and there will be such a boost in the market and the like, especially day trading, the rates, the derivatives, but it's not happening. The first thing I would say was, like if you go to the rate side, we had the first rates that came on, and what they promised the public did not happen. Because I was involved as one of the participants, not as a transaction advisor, but having to sell that product. What they did, and they called us for investment talks, they said the money they are collecting, they're having these properties. The monies they are collecting, they're going to buy these other properties. And therefore, the income from those other properties, combined with these other properties, will have a higher return. And as you share, because they usually share about 80% of what is collected, will be shared to the new investors or the investors, the shareholders who have come in. That never happened. It never happened, and therefore the price fell by 50% or even below 50%. Now, when you come with another rate, people are a bit hesitant. And therefore, they come cautiously. Fortunately, what is coming now, like the new ones, they are promising better returns, and therefore people will come slower. But if it proves that it is worth what it has promised, then it will encourage even others to come in and therefore improve on the rate side. When you come to the gems, like the growth enterprise market segment, we got companies that came with very high promises. You see, and that's
names withheld.
Yeah, they came and said this, they did this, we're going to do this, and it never happens. I don't know, probably is a conversation we need to have with the CMA, that when you promise this and it doesn't happen or you don't do, because you see, it paints a negative thing to the market. What should we do about it? I think it's something that we need to talk to CMA, because those things are not succeeding because of the promises that have happened in the past and not being actualized. I remember one major company, I won't name it, but I can tell you of this, who promised they're coming to buy, they underwrote some shares. They're coming to the market, underwrite the rights issue of the shares that are not taken, and buy them all. So what happened, the rights issue were trading in the market at a lower price than the rights issue price. So people did not buy their rights, because why buy at a higher price if the same share I can get it at a lower price? So the underwriter took all the shares that were not taken. Okay, a few did take at that high price, but they took the bulk of it. Now then they said, and these are the promises I'm saying CMA should really take up. They said, don't worry, we have underwritten, we'll buy the shares, but when the market is right, we shall sell back to the public. Let me tell you, that price went 10 times higher. They never sold. They have never sold. Instead, they came for more shares.
Wow. I see.
So these promises, I don't know how we'll ensure, once you have given them, they should be kind of held accountable. Why tell the public? Because you see, you're cheating the public. You're lying to the public, and they're investing in the hope that what you have promised will be fulfilled. So when it doesn't happen, you see, it doesn't send very good message. Those are the things that we need to make sure they don't happen.
I see. I have to ask you this final question now. I won't ask another one after this. In your long career in this business, which would you say is your most defining transaction?
I think Safaricom. And in fact, before even I get there, Safaricom had also intended to do share buyback when their share price was below 5 shillings. And during the reign of Michael Joseph,
MJ,
they talked about, I think maybe they had forces which said, don't move. But I think if he did, they would have made a kill in the market, because you buy cheap, hold, later on this price goes to 40 shillings from below 5 shillings, and sell back and you make money. So now, sorry, I forgot you had asked
your most defining transaction.
Okay, I would say still Safaricom, because Safaricom was, let's say, has been the biggest and very trying, in the sense that we had queues and queues. Those were the days we didn't have the the systems in place whereby you can now apply through online. And the like. That time was when people were queuing outside your offices, long queues and the like. And then we had challenges of people, because we said, as not just Faida, the fraternity in the industry, we said we'll not collect cash.
Yeah.
Instead, you go bank in this particular account, share account, bring the slip, and then we buy you the shares. What happened, and why we will never forget about that, smart guys went to Rithuri Road and printed deposit slips.
Oh my God.
So some people did the right thing and actually paid and brought the slips. Others went and faked them.
Yeah.
For instance, like Barclays, they would even, remember that before ABSA,
Yeah.
they had that ego. They would even have the slips, the same ego like everyone else. So you just receipt and give. When you later came to reconcile, they don't add up.
Yeah.
And you have already given them the shares. That was very challenging. And you remember they sold, they needed about 26 billion, and I think they got about 50 or 50
It was
billion.
massive subscription.
Yeah.
Yeah.
So it was so much, and the same time, like for Faida, I remember when we were reconciling, out of the 50 billion or so, we had only done about 1 billion.
Yeah.
But we couldn't reconcile proper. You have to go and borrow money to try and pay off the difference, because it's not adding up.
Yes.
And it was very challenging. Up to this day, the transactions in Safaricom with the brokers have not been concluded.
Wow.
Can you imagine? Since 2008.
Nate.
Yeah, because the receiving bank was Citibank.
Yes.
And they held about 200 million of brokers. And then they brought up complications of, we will not give you the money as brokers, we will give to the shareholders.
Yeah.
So the brokers were saying, I went out there, collected this money, and brought them as Faida to you. So why don't you give me back the money which you owe me,
Yeah.
and I distribute back to my shareholders? Why do you want to go directly to the shareholders who you don't even know?
Yeah.
So that argument stayed, because the leadership in CMA at that particular time did not support brokers. They're supporting the receiving bank. So the money was held, and up to this day, some money is still there. Can you imagine? Very unfortunate. So that's one of the most defining
Transactions for you.
yeah.
Bob, Karina, thank you so much for your time.
Thank you.
I'm sure we can talk a lot more, but we shall reserve that for next time.
No problem, yeah.
And that takes us to the close of our conversation with the chairman of Faida Investment Bank. That's Mr. Bob Karina. We have been talking about matters share buyback with two currently in the market. That's Centum and Nation Media Group. Stay tuned to Business Redefined.